I know a lot of people have been talking about the housing crisis, and they're scared that there's going to be a crisis going on in terms of possible crash. And we all want a possible crash in a situation where the price will come down to a sweet spot, and you'll be happy with that sweet spot. But you'll notice right now the interest rates are staying stable. A lot of people say that the Fed has to put the interest rates down, and that might be true. That might help the economy, but there's no sign that they're going to go through with doing that. Even if they did, the house prices are inflated. They are very high right now, and I do see prices coming down. But one of the things you have to think about in a housing market where the prices have already gone up and they're starting to come down, they're only coming down slowly, not aggressively. So when you don't see that aggressive move down, what you can be assured of that there's no true pinpoint cause, right? There's no collapsing happening. You can kind of track collapses with foreclosures. Are foreclosures increasing? And I think you'll have an ability to see the housing market only in a window where there's possible signs right now, right? You might see a drop in the market, you might see a uptick in foreclosures, and the overall consumer debt is increasing, and the overall default rate is slowly increasing. But that's with any type of economy like this, where we are a leveraged economy. Any leveraged economy will eventually just continue to increase their debt, continue to slowly have, and let's say, for instance, credit card debt is going to increase next year, and your amount of defaults are going to overall increase next year because more people are taking on debt, more people have revolving debt. But does that mean that there's a collapse because you have increased debt and increased defaults? Not really, because you can compare it with the amount of people today and tomorrow, and you can kind of forecast what it should be. What you're trying to look for is a bubble, right? You're looking for a bubble. All of a sudden, everybody can't pay, or everybody starts defaulting on their mortgage. Something happened which made people suddenly erratically purchase or sell, or massive foreclosures. We might not be seeing it right now because there really isn't a true bubble. But instead of going like this, right, and like that, we might be going, instead of like this, we're going like this, right? Just a steeper curve because it's not showing the bubble, and you might see a bubble like this instead of a bubble like this, right? Okay, there's a bubble. Now, if you're investing, if you're trying to get your stuff together, I think the biggest thing right now is try to keep your expenses low, try to keep your debts low, and try to keep decisions that are manageable. Now, a lot of people have special engagements. You have birthday parties, you have weddings, you have graduations. You want to get something nice. You want to go see a basketball game. And I'm not saying to try and remove those things like I tried to do. Me, I don't really care about that stuff. Gotten to a point where LeBron winning something is not going to help me out much other than give me some sort of emotional happiness, right? It's an entertainment value. I limit my time and my expenses toward sports. But you have to negotiate with your family, with your loved ones, with the people around you, some sort of game plan in order to have that long-term vision of life and where you want to be. If you want to stack up a house a year, it's got to come from somewhere, right? Housing crisis, you're facing inflation, meaning your food is going up, cost of goods is going up. You got to be able to combat that. You got to go into the shopping centers and think about, I really don't like to eat oats, but I need to eat oats a couple of days. People don't want to sacrifice. You don't want to eat beans and rice a couple of days? Good. Eat your steak, eat your seafood, get the things that you want to eat, and you're going to have to take that increased overage. When I've looked at the cost of utilities have doubled. My water bill has doubled. In a couple of years, that's doubled. My electric has doubled because I can trace what I've been paying from now. Your utility costs are doubled. Your taxes are doubled. My house taxes doubled easily, right? Insurance is doubled. because through COVID, all these claims came, and because of those claims, insurance costs got even worse. A housing crisis, not in a housing crisis, but when you're expecting a housing collapse, it might not happen because the people that purchased these houses were properly vetted, right? The appraisals and stuff were done to a point where the people that have these houses, for the most part, are able to maintain it, even though, right, they're struggling to maintain it. They might have to work a second job, a third. Both people might have to work dual incomes, right? But they were purchased not extremely over leveraging themselves. Another thing you have to also think about where they might be hurting is people have taken down payments or loans from third-party sources in order for these homes. Let's say you have $1 million home and you only qualified for 700,000. You got 300,000 from somewhere to that closing table, and that might have came from family and friends, came from gifts or whatever you did to come up with that 300,000. That's not going to show in the books. All it's going to show is a $700,000 mortgage. Now that individual, right, he's going to try and make that mortgage payment, right? He's going to try and make that mortgage payment, but still, there's 200,000 laying out there. There's $100,000 laying out there, and whatever the repercussions of those debts are, those defaults, plus broken friendships, broken family, broken friendships with money. It's a very, very touchy subject. When you're ready, when you can be successful, you make promises. People believe in you. They give you their money. They give you their investments. And if you lose it, you're stuck. You met the best. Hopefully you met the best. Hopefully you met that. It's good. But a lot of people are not paying back that 300 grand, 400 grand. They're delaying, right? This could be mom, pops, brothers, sisters, family, friends, or outside investors or personal loans. People will get money from anywhere to try and get that American dream. Now, what is the American dream? It's a home ownership. It is, but America realized that in order for the money to circulate, these home prices had to go up extremely high. They're in ridiculously high numbers now. Where's the opportunity? You have to think, even in this situation, you have to look for opportunity. Opportunity might be in Uber, a second job. Opportunity might be in the stock market. It might be in a city buying real estate that you're not familiar with. It might be in a product of real estate that you're not familiar with. I look right now as who's not really getting hit as much is people who are getting Social Security checks. People who are getting Social Security checks live in smaller cities that have low rents and are still living the same lifestyle, right? They will have overages. They will still be able to maintain what they're doing. The people that are having a hard time, the people transitioning and growing, maybe you move to New York, maybe you move to DC, you're a young kid or a couple, and you're trying to make your life, and you need to buy a lot of things. You need to buy rents, go out, do a lot of extracurricular things. Remember, every time you step in the house, there's an expense. So you're part of that gap of people who are gonna want to buy a house near the city, near a high-priced neighborhood. And these neighborhoods right now, I do see prices moving down. In some instances, I've seen 100,000 come down in San Francisco, 100,000 come down in Miami, but it's not everyone. Certain people just will drop that price. You don't know if that price is too high or too low. I haven't gone that deep into certain ones I've seen. It just wasn't within my range to try and go deep into. But you will still see more downs than ups, meaning they'll drop it 10,000, 40,000, 30,000 to try and get somebody to jump in. But they're still listing them at a high price. When you realize the price truly has changed, let me tell you one odd story. There's a time when in San Francisco, they used to list a house because appreciation was so inflated. They'll list the house at 600. And every real estate agent and everybody you talk to says, hey, this is going to sell for 8, and it will sell for 8. So you might look at a listing and it says 600,000, but if you're not familiar with that market, you say, hey, I'm going to put it out, this is what we can afford, but really 6 means 8, 4 means 6, right? But right now you go to San Francisco, you go to Oakland, 6 means 6, 7 means 7, 4 means 4. So these are kind of indicators that you can see as you're analyzing markets. And my level of knowledge in the markets and neighborhoods might be a little bit better than others, just because who's going to take the time to constantly look at these markets and check the prices, check the inventory, and see what's out there. I've been looking at some areas and neighborhoods. I can tell you the market supply, whether supply is high or low, because I was there when the supply was like churning. It was like 50 results or 200 results, and now there's like 10, 15. So overall, the housing crisis right now, we don't know. A lot of people are guessing this or that and using statistical data, maybe news data, to say that there's a crisis happening. But always remember, when a crisis is happening, time is passing, right? A year will pass, 2 years, 5 years, whatever it is, and you didn't make a decision. And that house that you wanted, that property, that investment you wanted is not bearing any fruit. So you have to look at right now, close in on something, but think about your risk. Yeah, think about your risk, but also be realistic. If these aren't the opportunities, see if you're willing to do something like house hacking, where you'll come into a house, rent out the basement or rent out the rooms, and be able to hold on to a house. If you can try to be a temporary landlord and make it work for you, that house, that investment can turn into something. You have to put your boots on the ground and commit to something and start to look and be a little bit more flexible in a crazy market. And when everyone's scared, think about it. If there's a crash, and ask yourself this scenario: if there's a crash, what would you do? If there's a crash, what would be your response? Would you be ready to pull the trigger on something? And if it was, what is that something? What exactly is it? Have you looked at it? Have you checked it out? Have you say, hey, this comes within this target price in this neighborhood, I'm going to close on it. Probably not even got that far. That's what I'm saying. If you don't know what you're going to do now, know what you're going to do in a crash. But always remember, nobody knows the future. A lot of people have big titles. They have tons of experience. They're always giving news and statistics, right? But we're all making decisions based on the probability and the risk that we understand. And you're only right because the future came your way. If anyone was really good at that, hey, they would be rich. They could just make bets. Now you can make bets on anything. You just make bets with people on any kind of news thing, right? I don't make bets, but it's not a thing I get into. But if you're right 90% of the time, you should be rolling in dough, right? And you shouldn't be, but let's say you're right now, you should put that to use somewhere where it's going to give you a return of benefit. So in terms of housing crisis, I do see inflation everywhere. All over the country, there's inflation. All over the world, there's inflation going around. When you look at the countries, when you look at the level of inflation that's going around, it's scary. But in this scary atmosphere, we have to do things to better our lives and progress forward. So I try to stay aggressive. I try to stay focused. And every day I pull the trigger mentally as I get up and say, hey, let's find the next opportunity. Let's keep going on this path. I built my life on IT and real estate. It's not where I wanted to be. It's not where my passions lie, but you got to keep going, right? At this point in my age, I got to close, and I got to close hard. So either I make something of it, or at the end we'll see what comes of it. But right now it's not a point to walk away or give up. I have a wealth of knowledge in finance, real estate, in the markets, so I should be able to put something together, right? That's the hope. But we'll see what the future holds. And everybody, like, comment, subscribe. I want to hear your opinions, share your feedback. And what we want to do is progress, right? If I don't make progress in building a house, make progress on buying a house. If not buying a house, buy a condo. If not, buy a multi-unit. But make progress. If not, figure out how I'm going to fund these deals. Is it a second job? It is selling on Amazon, whatever it is. Make progress in all things you do.